On behalf of Guru KPO, I, Professor B.K.Jain from MBA Department of Biyani Group of Colleges, welcomes you in this lecture. The topic of today's lecture is RBI as regulator. I would discuss this topic in two parts, that is two lectures. This is lecture number 1, which would deal many aspects. At the outset, I would like to make it very clear that the Indian financial system, there are 3 regulatory bodies. One is Reserve Bank of India, another is SEBI, Security and Exchange Board of India, and third is IRDA, regulatory body for insurance sector. Now I would start the regulatory role of Reserve Bank of India. The Reserve Bank of India is a regulator for the entire banking industry in the country. It regulates through many aspects which are given on the board. Let me discuss one by one. RBI regulates through, there are 2 main acts through which it regulates. One is Reserve Bank of India Act 1934, and the relevant and the most important provision of this act through which it regulates is maintenance of CRR. And this ratio is to be maintained as per section 42 of Reserve Bank of India Act, which says that Reserve Bank can prescribe CRR somewhere between 3 to 15%. The second important act through which Reserve Bank regulates is Banking Regulation Act 1949. There are many provisions of this act through which Reserve Bank regulates. Important are, number 1 is the minimum capital requirement which Reserve Bank prescribes for banks in different cities, looking to the category of cities. Then under this act, RBI conducts inspection of banks. Number 3, Reserve Bank of India also issues directions under this act, and if the provisions of this act are not complied with and directions are not followed, Reserve Bank of India is empowered to impose penalty. 2 more acts are there for controlling or regulating foreign exchange. These acts are Foreign Exchange Regulation Act, commonly known as FERA, and the second is FEMA, Foreign Exchange Management Act. Now, the whole focus of Reserve Bank of India, so far as the regulation is concerned, there are 4 aspects. One is safety and soundness of the entire banking system. Reserve Bank is always worried about whether the banking system properly or safely working or not. I would like to quote 2 examples here. Number 1, you might have heard that Reserve Bank of India has introduced new checkbook system. Old checkbook system is to be deleted and new checkbook system is to be introduced. Earlier this system was to be completed by 31st March. Now Reserve Bank of India has extended its date and the new checkbook system would be applicable from after July. You might have heard that existing ATM cards are also being replaced by Reserve Bank of India, and Reserve Bank of India is likely to issue digital ATM cards to avoid any forgery. Number 2 aspects of regulation is the protecting interest of depositors. The Reserve Bank of India's main concern is to protect the interest of depositors, and this Reserve Bank of India is doing through inspection of commercial banks and through its subsidiary Deposit Insurance and Credit Guarantee Corporation, which ensures insurance of the depositors' money in banks, and for that banks are required to pay insurance premium. The customer is not required to pay. The third is orderly growth of banks in India, and for this purpose Reserve Bank of India regulates through its licensing policy, branch expansion policy. More emphasis of Reserve Bank of India is on permitting more branches in rural areas and in those areas where banks are less. The third aspect of this topic is regulation of different types of banks. There are different departments which regulate the different types of banks in India. Number 1 is commercial banks, which consists of nationalized banks, private sector banks, and foreign banks. These banks are controlled by Department of Banking Operations and Supervision of Reserve Bank of India. The next type of banks are urban cooperative banks. You might have heard this name. In Rajasthan also, there are about 30-40 urban cooperative banks, and these banks are supervised by Urban Department of Reserve Bank of India. The third category of banks are regional rural banks, district central cooperative banks, state cooperative banks, and these banks are being supervised by RPCD Department of Reserve Bank of India, and they are supervised by National Bank for Agriculture and Rural Development, because the entire credit functions of Reserve Bank of India has been transferred to NABARD. The last category is non-banking finance companies, and these companies are supervised by non-banking department of Reserve Bank of India. Thank you. For further details, please log on to www.crewkpo.com. Thank you.